Good morning, traders. It is Wednesday, August 28th. Taking a look at the charts, we're just going to look at the daily chart today, keep it real simple. More or less, we've got the 200-day moving average, which is the red line here. If we go way back, you can see more or less we're hanging on this edge here with this formation. And the big question is the market going to break down, which is what our bias is. It's what we're positioned for. And if we were to just draw some lines on here, we've got previous consolidation area through here which is very similar to what we are at right now. We've got this type of consolidation, very negative bias. I talked about when we were trading right up into this area, I talked about it was something very much like the May top and also the October top. And the big question is, which one is it? Is it a quick three wave or a big one wave correction, or is it going to be a great big breakdown and a huge market flush? And it's starting to feel like it's going to be a big market flush to the downside. The longer and the bigger the pattern, the bigger the move. And you can see, obviously here there was a small hiccup, a little bit of a bear flag and consolidation. It moved down. This one was a huge pattern and it was a huge breakdown. And this one is, somewhere in between. Now, if we were to zoom in on the chart, or we'll just use a Fibonacci extension to get an idea of where the downward momentum should take us. Fibonacci extension, we take the previous high, we go all the way down to this low, and then we go up to the reaction high. We'll carry it forward. This gives us a downside target of where we could see the markets go. So it's sold down, it rallied up, and then the next momentum move. The 618 is usually a fairly significant level. If we get a bounce or pause there, it usually means we're going to hit that 100% measured move. And obviously that would break this low. And for all we know, this is just the measured move. If there's a lot of momentum and huge panic in the market, we're going to see the market slide and go into a huge washout low, just like over here. Now, if we were to throw a Fibonacci extension over on this pattern, go from the high down to this low, back up to this reaction high, you can see how this one played out, and we could get very much the same type of pattern. You've got the sell-off, you've got the rebound back up, and then you've got your 618, you got your bounce. If the 618 bounces, has some type of consolidation, which it does right here, that means the measured move is very accurate and the momentum should hit the 100%. And then of course you get some type of overreaction, panic sell-off in the market, and then you put in a bottom. So that is what we're looking for here, is this type of move and potentially some type of washout, panic sell-off, and then some type of reaction high. And then the question is, after that, is are we going to stall out somewhere here and start a bear market or another downtrend to test these lows over here, which if we break these lows, I will be full-fledged in a bear market. That'll be a top has been put in, and we will be looking for a major recession and some pretty tough times for the average investor and even businesses. Everything starts to dry up, and I talk about that in the 30-minute video on my website. When we get into a recession, or when you know we're close to a recession, this is when you actually want to be looking to sell businesses. You want to get really thin, get really cash rich. You can accumulate and buy businesses or licensing rights in a recession for pennies on the dollar. It's not just trading that we're looking at when we're looking at a bear market and a recession coming. There's all kinds of opportunities for an entrepreneur to liquidate, get cash rich, and then pick up things when people are struggling and giving them away, 6, 8, 12 months from now, or potentially a bit longer still. Anyway, let's go over to where the money is flowing today. Money is flowing out of stocks. We're down about 0.3%. The overseas markets like the Nikkei, the Euro stocks, the Dow, the DAX, down 0.75%, almost 1%. So the U.S. markets are only down a quarter. We got some more room for the U.S. to catch up to the overseas markets to the downside. If we look over at bonds, bonds are seeing the capital move in today. Let's just zoom in here. Bonds, nice reversal yesterday to the upside, poking up to some nominal new highs today. And I don't think we'll reach our first target on our TLT. It might get close there, but overall, it's having a really nice move. I do feel as though we could get a pullback in the safe havens very quickly here. We've had a strong run, and I'm looking to pull some money off the table soon on TLT, move our stop to break even, which is our entry price, just to protect the balance of our trade in case there's some huge reversal and rally in the stock market on news. The safe havens will collapse and go straight down very quickly. So we got to be very defensive and protect our money. But we are in position, doing really well. Bonds are up 0.5%. Gold is up 0.1%, so not a whole lot for gold at the moment. Bonds continue to outperform gold at this point. Silver is really kind of taking off again. It's up another 1.4%, really just rocketing higher. Going to come up, test our first target here around this 1867. And these are levels where I think we're going to be looking at the market having a pause or pullback, which is in line with our TLT trade. We want to be looking to take some money off when the safe havens are reaching resistance. Sellers will step in and move back into the risk on for a little bit. Let's take a look over at energies real quick. Crude oil up 1.3%. It is struggling here to get traction, but it does feel and look like a bottoming formation. The trend is neutral. This type of rebound and kind of flag formation, I mean, it's still stuck under this kind of resistance area, but it feels as though this was a washout low, feels like it was a double bottom kind of pattern. If this starts to break out, it could put in a nice run. Commodities could start to take off here, as commodities tend to do near the end of a bull market in equities. Looking over at natural gas, up 1.2% this morning. Again, it's got a similar pattern to crude. It turned green with our market trend analysis there yesterday or 2 days ago. It's got a nice rally up. It's been consolidating, holding above the 20-day. The momentum is shifting to the upside, and really it's built this little launch pad that we're just looking for a breakout. This is kind of like the launch pad zone right here where the market came down. We had a $2 target originally. It got pretty darn close. It came down to 203, and it's coming up. It's holding its ground, and we stuck a toe in the water with UNG looking for a pop and a move up into the mid $2 range and see where it can go from there. It does have lots of potential seasonality wise to move a lot higher, but overall we're just got our toe in the water, and we haven't really broken this first significant resistance level in the market. That will be the next level. If you're to box price in here, you've got a floor and ceiling there. We got a floor and ceiling there. The range that these consolidations take place is usually the amount of effort it'll have on the breakout. So overall, the next pop will bring us up to this resistance spike, and then from there we'll see if it can get some traction and truly reverse trend with a series of higher highs and higher lows. I think that's about it for this morning, and we'll catch up in a bit. Take care. Bye-bye.